So in the overnight session, we saw a breakout continuation to new all-time highs, and now heading into the open, our intermediate and bigger picture bias will continue to be bullish, and our short-term bias will continue to be neutral bullish. And we're going to be using the 58.75 to 68.75 area as the initial support, as well as the intraday bull bear zone. So above that area, bullish time frame alignment would be in effect. But if the market breaks and then holds below the intraday bull bear zone, especially on sustained downside momentum, then that would signal a false or failed breakout pattern, and it could shift the intraday control from the buy side to the sell side. And again, if we're selling off on sustained downside momentum, then we can quite easily head down into Friday's low at 55.40 to 46.5, where buyers may defend on first test, and a break and hold below 55.40 would serve as an intraday bearish indication, and that would then open the door for a test of 55.23.5 to 30.5 and 55.09 to 19 which is a better and more significant area of support. It's the intraday bias confirming zone, and there is a higher probability for buyers to be active at 55.09 to 19 especially because by that point in time, the market would begin exhausting the range potential of the day. And the lower the market pushes, the higher the odds of buyers stepping in. And then above initial support, we have the aggressive support zone at 55.74.5 to 77.5. Holding above that area off the open would be a sign of continued strength, while holding below it would be an early sign of intraday weakness. And then on the upside, we have initial resistance at 55.82.5 to 88, and a break and hold above that area on signs of initiative buying would serve as a bullish confirmation. And then above 55.88, there is no hard resistance, but based on the range expectation, as long as we're getting a sustainable breakout on broad market strength and sustained upside momentum, with the Nasdaq also hitting higher, ES could test 5600 and 56.0775 to 1775. That would mark the average range potential of the day, and then the 56.3175 to 38.75 area is the range exhaustion zone. So that is the market context and plan heading into the open. The main question is whether this overnight breakout is now going to succeed and remain intact, or is it going to fail, resulting in downside range expansion. So how the market behaves at the initial support zone, which we're also using as the intraday bull bear, is going to be very key. So that is the plan heading into the open. Let's see how the real-time situation shapes up and how the market deals with the initial support zone. That's going to help us determine the bias on the day, and we'll take it from there.